Welcome back, students who are taking financial accounting, and in this series of videos we are covering the theory for Chapter 8, the long-term and other assets. And let's see here, get down to that slide. Okay, so in this video we're going to be covering natural resources, which is also going to be a very short video here. When it comes to natural resources, they are exactly what they sound like, metals, wood, coal, lumber, that kind of stuff, are basic natural resources that we get from the earth. Obviously they're assets. So if you are buying, land, okay, and the land has trees on it, all right, so you buy this land, okay, that's the land, and it has trees on it, Christmas trees or whatever have you, okay, those trees are those are a natural resource. And under the ground, maybe you have gold, uh, oil, natural gas, right? Those are all natural resources. Okay, so when you're buying the land, you don't just automatically assume that everything above and below is part of the land, and that's part of the value of the land. That's not how you go when you buy a house. Okay, a lot of people think, oh, I buy a house, to live in, and I'm buying this house, and yeah, it happens to be on this land. Well, you can bulldoze the house, and you still have value in the land. Okay, um, and conversely, if you buy an open field and you build, an apartment complex on it, yeah, you've increased the value of what you own. Okay, so you have to look at natural resources separately. And when it comes to natural resources, yes, they can be depreciated, and when we depreciate them, we call it depletion for natural resources. And the word depletion means we're using them up. Okay, so basically, if I have that, let's say it's natural gas under the ground, there's only so much of it. Okay, and as I take it out of the ground, I'm depleting it. Right, that no longer is there. Okay, it's like that. If I have Christmas trees, okay, and let's say I have 200,000 trees, okay, as I cut them down, right, I'm depleting them. All right, I don't have 200,000 trees anymore. Right, so that's depletion. And of course, the formula for depletion, all right, is depletion per unit of natural resource is equal to the cost divided by the estimated total units of the natural resource. All right. So, if I pay, let's just say we're talking about trees, and I have 200,000 trees. And let's say my cost was, I don't know, $2 million, right? So I have my 2 million divided by my estimated total units, which is 200,000. All right, so that means, let's see here, 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5. Okay, that means each unit is worth $10. Each tree is worth $10. Okay, and of course, that's my per unit. All right, for each tree, 2 million divided by 200,000 is $10 per tree. And as I go along and I cut them down, maybe this year I cut down 5,000 of those trees. Well, 5,000 at $10 is $50,000. At $10 is $50,000, right? Is how much I would record for depletion. It's basically that simple. All right. Um, Aside from from an accounting perspective, and at this level, this is all you pretty much just need to know. Okay. You just need to know what a natural resource is, and you need to be able to figure out, you need to know what's you're purchasing, your cost of it is, and you have to estimate the number of units. Now, that just reminded me, and notice that's an estimate, okay? It doesn't have to be exact. I mean, um, if you're talking about, let's just say natural gas, all right, how do you know how much natural gas is under your land? And remember that land, let's say, let's say this is an area and you're buying this piece of this area, okay? But under the ground, there's a natural gas pocket that extends like this. Well, how do you determine how much is the natural gas on your piece of land? Because, you know, this person here has their land, this person here has their land, this person here has their land, and notice that they all share that pocket of gas, okay? So it's an estimate, all right? And of course, that goes beyond the scope of this book, this subject, but the whole idea being is that it is only an estimate, okay? You want a fairly accurate estimate, and that's done by paying for studies and blah, 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 blah. But once you have that estimate of the total number of units for the natural gas, then you can put a dollar value on it. And of course, as you use it, you deplete it. Okay, so that's it for this video. Like I said, relatively short. The whole idea being here is that, yeah, we have depreciation for fixed assets. We have amortization for intangible assets. Now with natural resources, we deplete it. Right, so read the textbook, very, very short. Watch this video again. If you still don't understand something, feel free to contact an instructor.